This is Bruce Whitfield's Business Week. It's powered by Capitec, the business bank for everyone. It's business without the boring bits. Each week we share just what you need to know to help you understand and navigate a deeply complex, confusing and uncertain world. This week, the deal that could change the future for millions of children, why simple is almost always better, and the meat merchant turned baker who is desperate for dough. Bruce Whitfield's Business Week, the podcast that respects your time and your intelligence. Of course, we do want to hear from you. Voice notes, please, your name, your idea, your concept, something you want to explain, to our dedicated Business Week hotline on WhatsApp 072 562 3179. Now for the brutal Business Week quiz, which is South Africa's most valuable bank? That's the question in this week's brutal Business Week quiz. Think about it. No cheating, no Googling. We'll give you the answer in just a couple of minutes. Helena Bassaman is the business editor at News 24, and my biggest story of the week, and the one that I believe is going to have the greatest impact over time, not necessarily 12 months from now, but massive potential to shift outcomes for South Africa in the long term, is this announcement from Curro that they're going to delist from the JSE, put the schools into a trust, and no longer run for profit, Helena. It's a shape-shifting moment.
It's massive. It really is an unexpected, very interesting move. We spoke to Jan Mouton, who's Jannie Mouton's son. Of course, Jannie Mouton being the PSG founder and billionaire whose foundation is going to buy Curro and intends to turn it into a non-profit. Anyway, his son Jan, who also works for the foundation, told us yesterday that the model will be similar to how a school like Bishop's is run. So it will be a public benefit organization. But of course, unlike Bishop's, you won't have to immediately identify yourself as a Curro learner in any social situation. The point just being that you would just not record profits. Any surpluses will be used to build schools in rural areas and for bursaries.
What happens when a Bishop's kid gets an MBA, I wonder? Here's the big question, Helena. Can education actually ever be run for profit? Is it actually a business model? I'm going to ask the chief executive, Curro, in just a second, if it's proven that actually you cannot get an education business at scale to run for a profit.
I think that's a valid question to ask. Let's be honest about it. Curro won't see a re-rating soon. It was under pressure for a long time.
Yeah.
Analysts tell us that they have like 71,000 pupils, but a capacity of 100,000 in their schools. So you're right. I don't know.
Yeah, well, we'll ask Curro that question in a moment or two. Something has been on the cards for years, and another shape-shifting moment this week. Finally, private operators are going to get to use the Transnet rail network. I wonder how practical it is, but hey, it's a breakthrough.
It is. 11 companies can now operate their own trains on 41 routes. They're expected to move 20 million additional tons of freight by next year. I mean, this has just been a complete disaster in South Africa. The rail crisis has cost us like 100 billion rand in lost mining revenue alone. And it's already opening up very interesting possibilities. The mining group MENA, which is one of the new license holders, it owns a couple of coal and manganese mines, and it can now, thanks to this, reopen a smelter in Meyerton, which has been shut for some time. All kinds of interesting opportunities.
I don't want to be a party pooper on this, and nor do I want to show off, but it's relevant. Long time ago, I was given a ride on Rovos Rail, very posh, old-fashioned trains that go all over Southern Africa. This was from Joburg to Cape Town, all very fancy. But we had to wait at a siding for hours in the Karoo because a Transnet train had to be given priority, and it was late, and it finally trundled past to do its thing. Just the logistics of having rivals using fixed rail networks is going to be challenging. And I wish them luck with scheduling it, because I question just exactly how it's going to work. Good news, but how is it going to work, I think, is the detail.
Yeah, Transnet doesn't have a sterling reputation when it comes to this, so let's see.
No, it doesn't. What do you make of Donald Trump targeting members of the US Fed he doesn't like. He went for Jerome Powell. That seems to have died down. Now he's going for a woman called Lisa Cook and announced that he's firing her because somebody in the Housing Finance Agency published a letter claiming she had done something wrong, lied on a document to get better interest rates. He said, well, I'm firing her because clearly she's guilty. She's not been charged. She's not guilty of any crime, but he's desperate to get his clutches on the US Fed.
I think it's a way to get more pressure on Powell, but it is quite ironic that she's getting fired for something to do with interest rates, given that she makes decisions about interest rates. The accusation from Trump is that she bought 2 houses and on each application said that it was her primary residence, which usually means that interest rates could be a bit lower. This is just more pressure on the Fed to lower interest rates. Trump wants lower interest rates to boost the economy, but he's also saying that higher interest rates are pushing the cost of US government debt higher. But, bonds are priced on how likely a government is to pay back debt. And Trump is making the US more unreliable. And in the end, investors will demand higher interest rates to invest in the US. So in the long run, this is going to be disastrous.
It's getting a bit technical, but they've got short-term rates, which are the interest rates that you pay today. And then there's the long bond rate, which is the rate over 20, 30 years or whatever. That rate is rising, which tells you that markets believe that there is too much risk coming into the system. And that's precisely what's happening at the moment. And you can shout and bluster as much as you like, but the market eventually will humble you, I suspect.
That's right. I mean, the point is central banks aren't always right. The Fed made a big mistake after the pandemic by not hiking rates soon enough after inflation started to pick up. South Africa was much more diligent. Our Reserve Bank is actually among the most disciplined in the world. But this is the rule of the game. You can't mess with the independence of a central bank. S&P has already warned that the American sovereign credit rating is in danger of a downgrade given these political pressures. So unfortunately, this is the game.
Helena Bosman, business editor at News 24. The one that has got global consequences, of course, is meddling with independent agencies. But my favorite story of the week, and I'm sure Helena's too, is this shape-shifting moment for South Africa where you get private school quality education being democratized in a way that I never imagined would happen. One of my favorite stories in business of all time is how when the Curro founder, Chris van der Merwe, who'd been leading the physical building of schools attached to churches, reached, I think, 3 different schools. And he realized he would really need help if he was going to take this idea of his to build a quality, affordable chain of private schools. So he took the idea to PSG, which had been founded, of course, by Jannie Mouton. And Jannie Mouton sat in a meeting with his investment committee. He listened to the pitch for a couple of minutes and at one point pushed his chair quite noisily away from the table. And Chris van der Merwe, he felt his heart sink because he thought that he'd lost the interest of Jannie Mouton. And if you lost the interest of Jannie Mouton, nobody else would likely support him. And what Jannie said next would change everything. And he said, I don't know about PSG. It must decide what it's going to do, but I'm going to invest. And he excused himself from the room. He left because he had something else to do. And the rest is history. It was a visionary moment. And of course, PSG famously also backed Curro. And it has been a remarkable success in the delivery of education. The idea of a Curro as an investment is very exciting. It's very compelling. You put money into the future of the country. But this week's announcement that it will delist from the JSE, that Curro will be put into a trust where shareholder returns are no longer going to matter, is possibly the most interesting change in years. It's as seminal a moment as the original idea of funding the schools was. The chief executive of Curro is Cobus Loubser. Right now, Curro is going to provide better education at a price point where enough people can afford to ensure that investors are rewarded, Cobus, because you've got 2 customers here. You've got your investors and you've got parents and children and a country that needs educated young people. And it does raise the question as to whether it is possible to deliver great mass education for profit. The answer from your move this week certainly seems like no, it's not possible.
Thanks, Bruce. And I think I disagree with you because I guess at the core of the question is, can you or should you separate profit from purpose? And I think for probably about 25 years, we have used shareholder capital to create facilities for the benefit of learners and for education, in other words, for purpose. And we've bridged that gap with professionalism, with the quality of execution in those facilities. And if done well, and the offering is compelling, then customers or parents or families are prepared to pay for it and are prepared to pay enough for it to justify the asset invested to offer it. So I think in some ways, the extent to which the Jannie Mouton Foundation, who has made an offer, it's not a done deal, and then we'll talk about that shortly, but the extent to which they are confident to place a burden of goodness, of being a force for good on Curro and to work through our community in the future can only be if they regard our operation as sustainable. And that sustainability must be a function of what we can generate.
That is not in dispute here. The question is it an investable, returnable asset class? I mean, you've invested 14 billion rands worth of shareholders' money since Curro was created. You're offering them half of that to say, give us back your shares and we're going to put it back into the trust. Now, that strikes me as a lousy investment return, right? And that's the question. It is, can education for profit be sustainable? This seems to suggest it can't be. The fact that we've got great assets that can be used to create a sustainable future for the country is a positive thing. But can education for profit be done?
No, I think it can be, and we have done it for a long time, and others on the JSE and otherwise are doing it. I guess the challenge is the timelines and the extent to which these are long cycle investments, and you really need to be able to stay in the race and to keep going for a reasonably long time to do so. So I don't think it's really about whether it can be done or not. It's really about the extent to which you can be patient with your capital. And I guess in the case of Curro, this operation, if you look at the tremendous growth between 2010 and about 2019, where the schools went from about 12,000 learners to over 60,000 learners, and the number of schools went from 12 campuses to close to sort of 75, there was tremendous growth in a period where the country in the first part of the 2010s did reasonably well and had some economic growth. So we had some tailwinds. And of course, in the latter part of the 2010s, some headwinds, and to some extent that's continued. So I guess I don't think this is really a question of the sustainability, the investability of education. If the transaction is approved by shareholders, it's perhaps an opportunity to accelerate the kind of things that we can or should do with less of a return on equity kind of requirement. In other words, can we do things that currently we are holding off because the returns perhaps lower, or the volatility or the risk profile is a little bit sort of, you're not sure. So that, I think, is the opportunity. If you apply a classic weighted cost of capital perspective, at the moment our cost of capital is circa 15%. If you apply a lower cost of capital, would you be able to do more schools, try more things, do more? Of course you would be.
What is your best estimate as to, if you take the profit motive out and you're doing this purely as it must cover its costs, it must get a return so they can continue to invest and continue to grow and expand, how many kids can you reach in 10 years from now? You've got enough capacity right now for 100,000 kids, and there are about 60 or 70,000 signed up. How big can this model get without the profit motive?
Look, it's a fantastic question, and I suppose let's work backwards and say there are 13 million learners in South Africa. And if you look at the dispersion of learners across schools, roughly 700,000, 740,000 learners are currently going to independent schools, and about 2,000 independent schools. Then there's about 2,000 public schools, fee-paying schools, which also cater for about 800,000 learners. So arguably 4,000 schools have some element of parents contributing or paying for education. And then there's 12 million learners who are, going to public schools in 21,000 public schools around South Africa. And you can talk about class size and all sorts of outcomes. There's exceptional outcomes and there's harder and difficult challenges there. But in essence, can we do more than what we're currently doing in our current portfolio? Of course we can. We've got built capacity that we can certainly utilize. But I guess the opportunity is to expand to more schools.
You would have done the sums, Quibus. You would have done the sums. Do you anticipate you will serve twice as many kids in 10 years, 5 times as many kids, 10 times as many kids?
You're not going to pin me down on this one, Bruce, but let me answer the question this way. I think all of us at Curro are very passionate about making a difference, and the transaction may accelerate the pace at which we can make that difference. So let's just say we would be disappointed if it's not many more.
I remember the real look of anguish in Chris van der Merwe's eyes. I sat opposite him in a radio studio many years ago, the founder, I mentioned him earlier, and he was despairing at the fact that he had offered to build government schools to spec, to run them within state budgets and still make a return for Curro, with better education outcomes, and the Department of Education refused. And I wonder if you take this out of the public eye and you make Curro into a trust, whether it is possible then to get greater collaboration with the Department of Education to accelerate state education with more of a private mindset. Possible or not?
I think it's not in anybody's interest for our public system to collapse. It's not in our interest. It's not in the learner's interest. It's certainly not in the country's interest. So I think any form of collaboration to improve outcomes is critical. It's not even is it possible. It's necessary. It's critical. And I can say that, at various levels, we do engage with government. There's some very smart people who are doing amazing work. And I'd look forward to more of that level of engagement and greater collaboration, particularly in a moment where we have to orientate education in South Africa to a future where we may have less teachers than what we currently have, to a future which is going to look different to today relative to digital and artificial intelligence and other kind of developments globally and other themes. And we have to prepare our learners, not just as young citizens, but as entrepreneurs and leaders and professionals in that world. And so we need to collaborate to create the kind of environment that can foster success. So I think from my perspective, it's not a question of should we or could we. It's a must. It's a critical necessity.
Cobus Loubser, Chief Executive at Curro. Thank you very much indeed. To the co-owner of the Grill House Steakhouse Group in Johannesburg, now Saul Mervis. It's a story I've wanted to get my teeth into for some time now, Saul. And the fact that you guys have bought into Forno's, which is another Joburg-based food business. It's a bakery business. I think it grew at its peak to about 17 outlets after COVID shrank to 12. Then why are you in the steak business getting into the bread baking business?
Hello, Bruce. Yeah, it's a question we ask ourselves on a daily basis, but a great opportunity presented itself to us, and it was a private equity deal, and they approached my partner Marius de Lorey, and they approached him with the deal, and he brought it to us, myself and my other partner Peter Williams at the Grill House. Marius has been a partner of ours in the Grill House for many years as well, and we looked at it and thought there was a good opportunity and great growth potential there, so we put into it, and we're baking bread, but we're not making dough yet, but hopefully that will follow.
Maybe making your bread since you opened in 1994, so you're familiar with them, you've dealt with them one-on-one for decades. What's the rationale, though, of tying up a grill house with a bakery group? Where's the overlap?
So I guess the synergy is basically in hospitality. We understand hospitality. Fornos is a fantastic brand. It has great credibility. It's been around pretty much as long as the Grill House has. In fact, the original founder, owner, Harry, built his first Fornos in Rosebank almost at the same time we built the Grill House in Rosebank. So we did build a long-standing relationship. He built his business on very much the same ethics that we do. It's about generosity. It's about people. It's about friends, family, community. And, as time went by, Fornos, there were a few changes in Fornos, and Harry left the business. And as I say, the opportunity came to us, and understanding hospitality as we do, we saw the opportunity in it. It's a long-standing business. Many people asked us exactly what you said, why Fornos? And once people heard that we had taken it over, I can't tell you how much advice I've had on how to bake, what they should bake, what they did bake. But the one thing that nobody said to us is, what's Fornos? People knew Fornos. They knew the brand. We have a lot to work with. It's got an amazing, amazing team of people. There are some incredibly talented bakers who just need a little bit of revitalization, a bit more initiative. I think our biggest thing has been to boost staff morale, which seems to be a little bit low at this stage, and the capability there is boundless. I mean, we're really excited with what we can do.
When I look at the growth path, and I mean, there are 3 grill houses since 1994, and you've flexed and you've tried different things and different sites and different stuff. Fornos was at 17 at its peak. It's now down to, I think, 12 outlets. There doesn't seem to be a massive growth market in terms of footprint. Do you look national? Do you start taking these concepts and developing them nationally now, or is Joburg the core focus?
I would say Joburg is still a core focus, but funnily enough, we are looking at 3 new sites as we speak at the moment. One is in Joburg, in probably the Parktown area. One is in Pretoria, and one is in the Vereeniging area at the moment. Since we've taken over, we have had so many inquiries from different landlords that we've done business with in the past to go into different centers. So we are being quite circumspect and choosing very carefully, but we're definitely on a growth trajectory, and our growth will be we're definitely not franchising. There's no more margin in the franchise model, I believe, and our growth will be via joint venture partners and finding the right person to partner with.
I remember chatting to the founders of Seattle saying, you're in Cape Town, you're in Joburg, why are you not national? And just the explanation that came as to how hard it is to go even to Durban after that, the complexity and how people are pulled hither and thither, the difficulty of taking these concepts. And Natasha Sideris, we know her well, has done very well in globalizing her business, but she's done it, I think, at an enormous personal cost, because this stuff isn't easy, is it?
No, it's definitely not. And I'm working a lot harder than I was hoping to work at this age and stage of my life. But we are loving it. We're enjoying the challenge and rising to the challenge. As you say, I think the secret of Fornos, and people say, what's the secret of a good bakery? We always maintain that the time and distance between the oven and your mouth is what makes a good bakery. So we open bakeries that bake on site, and people literally get their bread out the oven, put it in their mouth hot. And that's where going nationally can get a little bit tricky.
Saul, thank you very much indeed. Saul Mervis, co-owner of the Grill House Group, has got a new name now because the Grill House Fornos Expansion Group. Have you got a new name?
Well, we're just looking to buy a candlestick making business because we've got the butcher and the baker, and no, there's no new name. It's still the Grill House and Fornos.
Thank you, Saul. So earlier, I asked you a question in the Brutal Business Week quiz, which is South Africa's most valuable bank? The answer, of course, is Capitec. And before you shout at me because Capitec sponsors the show and you think I'm sucking up to the sponsors, I'm not. It's a great question because it offers mostly retail and business banking without the complexity and the massive spread and the huge asset bases of what they used to call the Big Four. Capitec now is the biggest of the Big Five. Capitec's market capitalization, the value of all of its shares put together, 424 billion rand, surpassing that of First Rand. Now, if you want to blow your mind on this one, 100 rand invested in Capitec on the day it listed on the JSE. This was in 2002, 2003, middle of a banking crisis. Sambo had collapsed. BOE had collapsed. There'd been a run on Nedbank. It was under threat of collapsing itself. And Trevor Manuel had to step in and provide government guarantees to calm things down. 100 rand invested in Capitec on the day it listed is worth more than 200,000 rand today. Yep, 100 rand invested in Capitec on the day it listed, worth more than 200,000 rand today. One of South Africa's most successful investing stories, alongside Naspers of the 21st century.
Why pay more for business banking? Does your account come with a private jet, a 5-star lunch, a butler named James? Didn't think so. At Capitec, you get the same low fees as personal banking, so you always know what you get and what you pay. Open your account in minutes and save up to 50% on transaction fees. Visit capitecbank.co.za to get started. Capitec, the business bank for everyone. Capitec is an authorized FSP. 46669. Conditions apply.
The head of equity research at the Old Mutual Investment Group is Merrill Pick, and South Africa is going to get a great deal, Merrill, if shareholders in Curro accept a 7 billion rand offer to delist Curro from the JSE. I wonder, though, if it's fair on shareholders who've built the business over, 20 years or so, to get quite a small payout for the amount of money that's been invested in the business.
Yeah, what an interesting question, Bruce. I think, first of all, we have to point out that the listings to delistings ratio is still going in the wrong direction for the JSE. So this shrinks the universe once again. I think, just looking at what Curro has earned in earnings per share over the last year or two, it's somewhere between 80 and 85 cents. This offer of 13 Rand per share puts a 16 times price to earnings multiple on that, which is at a discount to Advotech, but recent performance for Curro in terms of learners and utilization of schools has been dropping a bit. So it's arguably, comparing it to Advotech, it's in the right ballpark. I suppose it would depend on what the shareholders expected from here.
I couldn't nail Cobus Loubser down on this, but it's a question of, I mean, if you're in Curro and you've got tens of thousands of kids signing up, there's no need to change the business model. This isn't altering the business model to enable the school business to survive and thrive and to serve South Africa. It's a big and noble goal. It does suggest that if you are building education for scale, doing it for profit is probably not a great business model.
Or the market is maturing in terms of the subset that can afford that. You know, we've seen fantastic growth out of Advotech. If you dig a bit deeper into the result, the rapid growth now is coming outside of South Africa. So that growth has moderated, it's maturing, and the 40% kind of growth levels are coming outside of the country now. So have we hit the saturation point for affordability?
Yeah, that's going to be the big question. But also, if you take the profit motive out, you can change the pricing models, you can alter it slightly. Again, these are clever people and they know better than I do, certainly. But it's a really interesting move and one I see as very, very positive. Sasol, is it finally turning a corner? Are we seeing a little glimmer of hope in Gluck, Gluck, Gluck?
A flicker. If you squint, it's the flicker at the top of the stack in Secunda. Or is it a glimmer of hope for the share? Yeah, so I think a few things have gone right. Sasol has become good over the past few decades at just scraping past the iceberg, I suppose, right? And I think when it was being priced at 70 Rand or less in the last 18 months, I think the market was once again fearing the balance sheet is too heavy and we're headed for a rights offer. And particularly when the oil price started to come under pressure, I think that was a risk. On our numbers, we thought balance of probability, that's not likely. I don't think Sasol's ever done a rights issue in their time. So they did get a bit of a tailwind from the cycle now. The chemicals, plastics, chemicals, petrochemical cycle is starting to turn. Those prices are bottoming, which is good for the US operations, the European operations in particular, which were loss-making. But they have also taken some of their own measures to cut costs there and to mothball, especially those Lake Charles. Certain units within Lake Charles have actually been put on care and maintenance. So I think Simon Baloyi has come in and taken some decisions that previous management were not willing to take. The other things that are in their control is what they spend capital on. Again, previous management had gotten themselves into a difficult spot, promising a lot of aggressive capex to fix carbon emissions. No real economic return on that spend, and he has slowed that process down and said, hang on, we've got to preserve the value in the business, we've got to preserve jobs while taking a more pragmatic approach to climate change. So I think the things within his control, within management's control, they have actually done reasonably well. They got a shot in the arm from the Transnet settlement. But even if you take that out, they grew free cash by 15% outside of that Transnet thing. And this is in a lower oil price environment, which I think is a respectable result.
And finally, Capitec this week becoming bigger than First Rand, or at least more valuable than First Rand. Does it suggest that simpler is better? Because if you look at the asset bases of the banks, they're in the billions of rand, and Capitec is a considerably smaller operation altogether, and now is more valuable than even First Rand. Is it an unrealistic valuation of Capitec or a validation of a business?
I think it's both. We do think Capitec has built a great business model, and they've specifically built it around a few things that a good value proposition for clients. They intentionally built something more affordable than what was out there. I think that's a winning business model, especially in an emerging market. They built it in order to be profitable, yet serving in a more affordable way client needs. So clearly that's structurally sound given South Africa's constraints. But they're also not yet a full service bank. So your mortgages, vehicle loan businesses, they are actually less profitable. So the question is, Can they continue to grow now without playing in those markets? They've cherry-picked the most profitable areas of banking. We think that's a smart approach, but we think the valuation is extremely rich. They are the most expensive bank in the world.
In the world?
Quite a statement. On a price-to-book basis, yes.
Yeah,
yes.
okay.
At 8 times price to book, they're the most expensive bank in the world. Should they be trading at 2 times book like a FirstRand? Probably not, given what they've built. Should they be trading should you buy the most expensive bank in the world right now? Also, probably not. If we have a repeat where there is, we had the most amazing opportunity to buy this business when Viceroy cast a shadow over their business model. Wow, I am waiting for an opportunity like that where something casts a bit of doubt onto Capitec, but that the business is solid, and that's the best time. So I think there are theories that it should be valued like a payments company, it should be valued like a fintech. Yeah, I'm a bit skeptical. If they can continue delivering growth, what it does mean is that one of the other big 4 banks is in serious, serious trouble. And are we going to see a further amalgamation? We've got one bank that's an amalgamation. If they keep going the way they're going, one does have to ask questions about who's the weaker link in the big 4.
Food for thought. Thank you very much indeed. Meryl Peck is the head of equity research at the Old Mutual Investment Group. Certified financial planner Warren Ingram and I helping you develop a step-by-step guide to help you reach financial freedom. It all happens in less than 3 minutes a week, and we give you just one action you need to take each and every single week. And if you follow what we suggest, it will bring you closer to financial freedom. This week, how much do you need to retire?
It's the number that suits us and the life that we want to live. So I think just to understand, for some people, they dream of the private jet lifestyle. And, for them, their financial freedom number is way bigger than for someone else who says, I'm happy to live a simple life in a small town and kind of spend more time in nature and less time on buying fancy stuff. So it's the number that you need to suit the life that you want to live. And it will be different for all of us, but the way we calculate it is exactly the same.
How do we get to a number that says, I've got that amount of money, I can stop working on a particular day, and I know that I'm not going to need to worry?
So what you do is you take your expenses over a year. Everything that you spend on your accommodation, your food, entertainment, all of those things, your transport, most importantly, and you put that all together and you work it out over how much do you spend over a year. The important thing to add there would be the expenses that you incur that don't happen in every single year. So, for example, some people buy a car every 5 years. So what you need to do is say, if a car costs me 100,000 every 5 years, divide that by 5 and say 1/5 of that now I need to put into my annual expenses. And then you've got your number, the amount that you spend in a year, and that's determined by the lifestyle you're living. And most importantly, it's the key calculation for how much you're going to need over time. And what you do with that annual number is very simple. Get your calculator, times it by 25. When you get that number, that is your financial freedom number.
At what point do you do this calculation? Because if I do this calculation at 25, it's going to be very different to the calculation I do at 55 and certainly different to the calculation I'm going to do at 65.
My suggestion is you do it every year. And you do it in the same month every year so that you get a measure of consistency. So what you want to do is you want to see that every year the gap between what you're aiming for and what you have is getting smaller. And that's all you're worrying about. Am I narrowing that gap day after day, week after week, month after month, year after year? Because if you're making progress, it's one small step to getting to that number.
It's a wonderful checklist and it keeps you on point, I think, Warren. So what is the first step we take in this process of calculating this financial freedom number?
Take all your expenses, all of the money that you're going to spend in a normal year, not what you think you should be spending, but what you really are. Annualize the ones that don't happen in a year. So make sure that you've got all of your infrequent expenses that come in every 2 or 3 years. Put them all together, get that annual number, times it by 25, put that number on your wall and start working towards it.
Warren Ingram, certified financial planner, and Bruce Whitfield, taking micro steps to your financial freedom. So our thought for the week this week, how good are you at taking feedback? Feedback's great if it's positive, right? Everyone loves to be complimented, to be told they're wonderful. But what happens if you don't like what you hear? Do you get defensive? Do you simply ignore it? Or does it drive you into a deep funk because you know it's true, but you don't know what to do about it? All of those things are possible, of course. Hopefully, you do none of those things. You go, that's fair, and you work on fixing whatever the problem is. This week's quote comes from a guy who used to get lots of negative feedback because he had a habit of launching his products before they were ready. And I'm delighted they've improved since then. From Bill Gates, the founder of Microsoft, your most unhappy customers are your greatest source of learning. And this rings true for me this week because I've had two experiences recently. One with a beautiful looking hotel and one with an airline that is very respected. I nearly gave it away. My experiences were so bad that I gave detailed feedback, and I'm not one generally who's going to sit down and write a letter and find an address and email it to somebody, but I did on these two occasions, giving very detailed feedback. And I got very generic responses back. They were pathetic. So I entered into conversations with both companies and very quickly became clear they had zero interest in taking the feedback on board, despite the platitudes that they presented. So I did some Google searches about both of these companies, both very substantial. And what they revealed is that my experience is not unique. In fact, the issues I faced had multiple references online as well. I don't like to make predictions, but I do suspect that both of these companies are going to be in serious trouble in time. Maybe not next week, maybe not the week after. Maybe they'll continue getting rid of their customers who tell them what's wrong. If you don't pay attention to what your customers tell you, it will bite you in the you-know-where. We'd love to hear from you. A short voice note, more than 20 seconds or so. That'd be nice. Your questions, your comments, anything you want to talk about. Our dedicated Business Week hotline via WhatsApp on 072 562 3179. Again, I'm waiting for your quotes, your favorite quotes of all time. Share them with me. Let's get talking. Thank you so much for listening to Bruce Whitfield's Business Week on News 24. It's powered by Capitec, the business bank for everyone. For now, bye-bye.